Good afternoon, good afternoon. April 1st. I always hate how on April Fool's Day, if you go on social media, like every other post is like a fake post because it's an April Fool's joke. Like Jackson Hole posting a picture of a 2-year-old doing a backflip off Corporate School R today. And as much as I hate that, I made the name of today's afternoon meeting the Market Plummets. So I'm doing the exact same things that I can't stand that other people do. The market plummeted today. All right, I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Covered calls I had expired in my favor primarily. So those are gone. And I actually took a little bet on some Baidu. Well, some 112 calls expiring this week. When I saw a sweep go through, I just followed it. So I'm decently bullish on the China trade right now, which we talked about in the morning meeting. All right, we can talk about that in a second. So how did we close today? SPYs are down 0.2%. The Qs are up 0.2%. The IWM got smacked a little bit. Russell's down 0.9%. That's after the Russell was showing relative strength to the Qs pre-market. But within 5 minutes of the market opening, we had the Qs ripping higher, the IWM selling off. Even the Qs couldn't really maintain those opening gains. The Russell was relatively weak today, which is not necessarily the end of the world. I doubt it's even a pullback to the 80 MA on the daily chart for the Russell, but let's take a look here. So, yeah, SPYs struggled to continue, and I would think that they would. I know that we had a ISM manufacturing PMI that came out at, I think, 10 today. And Rock had highlighted that there was a prices paid number in there, which is a little bit hot, which can indicate some inflation. And you can certainly see that the market got hit down decently hard at 10 a.m. regardless of what index you look at, and we actually never recovered. I remember whenever we get those negative Maribozu news candlesticks like that, or positive Maribozu news candlesticks, even if there's not news, just a positive or negative Maribozu that's very wide-ranging, it has an effect on the market. And I like to say in a strong market like we have here, very obviously with the Qs, where then you get this sort of candle here at 10 a.m., it's kind of like a penalty box candle where on the very small time frame makes the market guilty, and it can only prove its innocence by actually negating that candle. And the Qs gave a decent bounce back there after the initial sell-off at 10 a.m., but was never able to fully recover. So maybe you could say that number that came out at 10 a.m. is the main reason why we had a weaker trading session. But I would have thought that even prior to 10 a.m., the market would have been performing better than it was off the PCE, which seems like it came in a little bit light on Friday. And it just wasn't. So, my thought process, and I need to do a little more research and want to update myself on some information, but I'm starting to have more and more of a thought process of, what about this potential of a market here where, we're starting to become a little rich from a valuation perspective. It's been a massive, massive move since the October lows. But maybe instead of, we keep looking for either this trend to end because we get like a blow off top, market up, vol up, a real parabolic move for the market. We keep thinking that is one potential end for the market. We also keep paying attention to these major downside support levels that never seem to get violated, never seem to get breached because, one, we understand that we're in a market that's been consistently very positive gamma, so that's helping to make small dips very, very much viable. But I've been saying for over a month now that a big dip, if it could actually happen, could lead to significantly more selling, because that's the only way that you'll get out of this kind of positive gamma environment regime and actually create some systematic selling flows that come into this market. So the trend has just continued to be up and up and up and away, but as you can see here with the SPYs, it's never gone parabolic. It's just been within this channel for months now. Though the Qs, interestingly enough, pretty much ever since AMD and NVIDIA had their recent tops, have more or less been in a sideways range for an entire month. And I'm starting to wonder if this actually could become more of our new normal type of price action as we come into our second quarter here, which would obviously be very boring from a trading perspective. Not really what we want for opportunities that are going to be very conducive to shorter time frame trades. If you're more of a momentum trader, at least, we can make adjustments to be able to trade ranges as we have in the past. I remember very specifically, though it's been a while now, when we were in this range here for a couple of months, when I felt like traders were starting to pull their hair out a little bit in April and May of 2023, where we were doing entire afternoon meetings at a certain point about talking more about focusing on range-based type of trading strategies as opposed to momentum and trend continuation types of strategies. And obviously in this environment, your momentum and trend continuation strategies have paid very well, provided that you're focused on the right names, the names that have actually been leading the market, because there's certainly been a lot of underperformers that have been out there. But I can't help but wonder, as I watch the Qs go sideways, the SPYs have been able to continue because I think that there's been catch up in the IWM and some overall breadth improvement. But I can't help but wonder if there's a chance here where this market just becomes expensive enough that the buyers aren't strong enough anymore to really continue this market higher, but not enough actual selling pressure to really break any major levels to the downside, especially with so many consistently positive flows, where we could see more sideways price action. We're already seeing it in the Qs. We're not really seeing it in the SPYs or the IWM, but I certainly think it's a possibility. But within the confines of that, we could still have really strong dispersion. We could have opportunities in relative strength and relative weakness. We always have opportunities in our earnings seasons. And the key, I think, to today's trading session was absolutely relative strength and relative weakness. And we discussed it in the morning meeting today, like, this is a set of stocks, and we're primarily talking about our mega cap names. This is a set of stocks that are relatively strong or relatively weak pre-market, are relatively strong or relatively weak on their daily charts. And therefore, if we get a market that's giving continuation, we can go after the relative strength names and setups. And if we have a market that is failing to give continuation for whatever reason, even though it seems like it's the more unlikely situation, then we can go after relative weakness. And that was pretty perfect, I think, at least off the open this morning. Our basket of relatively strong stocks that we said we could look for longs in were Google, Microsoft, and Amazon. Google obviously worked phenomenally well. You had this inside and up there. I liked this tail off the 80 MA. I like the fact that it's above this 150 inflection point. That one was by far the best. Amazon gave a good opening move before completely failing, kind of similar to the Qs. So if you had good execution, maybe you were able to have like a break-even trade in this Amazon. And Microsoft, I think, was somewhere in between. Didn't fail as badly or in the same way as Amazon did, though I guess it did eventually fail, but didn't give the same continued strength as the Qs did. So that was kind of our basket to look for longs. And then on the short side, kind of the basket for relative weakness is Apple. Whereas I was just looking at Apple to the long side back here on Wednesday because I liked how it held up on Tuesday in the face of bad news. I did not like the price action from Thursday. I thought it pulled back way too much of this positive Maribozu, gave an inside day, and it was also relatively weak pre-market this morning, which was an additional signal. So we thought maybe Apple for like an inside and down, maybe if Apple can lose 170. And Apple was super weak off the open. There was a good inside 5 and down here, though the Qs were so strong that this was not my preference. In a strong market, the Qs were trading so strong in the beginning of the day, I would much rather be looking to be able to buy Google with what the Qs are doing, as just an example, than short Apple with what the Qs are doing also as an example. And Apple really struggled to actually break down in a further way through that 170. But we had Apple in the relative weakness camp as a potential short. We had Tesla in the relative weakness camp as a potential short, though this recovered pretty nicely in the afternoon session. At one point, this thing was brutally weak. I think we even called out the oversold bounce along here at lows. Yeah, we did. I wanted to break through 170 and to buy it back on the way up on this candle, which I didn't get. But I think one or two of you guys snuck in a little bit early and were actually able to capture that to the long side for the bounce trade, and actually turned into a lot more than that. But Tesla's super relatively weak off the open. Some potential shorting opportunity there. Talking about Meta as also potential short if it holds below 500, but also mentioned that this 480, which it was near testing, is a major support level, and that it's a day 4, day 5 to the downside. So while Meta's below 500, I'd rather be short than long, but I don't really want to be shorting day 5 into support for Meta. So this one was kind of a hands-off name for me, I think a little bit more, but held that support very well and gave a great bounce off of it. So the point is that there was, pretty good trading opportunity that was out there today, I think. But the key to it was really focusing on relative strength and relative weakness, focusing on the market, because we are in between earnings seasons right now, and there just was not a whole lot out there as far as names that were in play this morning that were worthwhile to focus on. I'm pretty bulled up on the China trade. I mentioned that, I think, starting on Thursday of last week, and then I re-mentioned it in the morning meeting this morning. Really liked the news that we saw Thursday morning, that it seems like the Chinese government is starting to actually take a little more action as far as effective economic stimulus, as opposed to just limiting short sellers from being able to short, but actually engaging in some QE. And then we saw some good economic numbers come out overnight in China. So still really liking the China trade. I got involved in Baidu to the long. Did I add that to my disclosure? I think I did. If I didn't, it's supposed to be there. Whatever. I think it's there. I can't even find it right now. There it is. Whoops. There it is. Part of my disclosure. I am long Baidu, especially as I talk my own book. I started buying it on Thursday off that news, and was surprised I couldn't get any follow-through. I thought that these names would have been up a lot more on that, but I swung it anyway. Like I say with these Chinese names, they're really not day trading vehicles. They don't trade well intraday anymore. You kind of have to be a bit bigger picture on them, which is difficult because it forces you to take on a lot more risk, because these things can potentially gap past your stop losses. But finally, we were able to get this Baidu to break out through kind of 106, gave good continuation today. We've got an AI conference, I think, on April 16th. So this thing's looking good. I know JD failed up at that $28 area again, but I think that 28's still in play, and that JD looks good. They keep buying their stock back. And BABA is still very much in range. It needs to get above 75. Then it needs to get above that like 77, 78 broader resistance zone that's up there. But I'm pretty bulled up on the China trade. We saw a lot of Baidu flow hit, so I was like, you know what? I'll join in on some Baidu flow. I got some options. I got some options access right now. Why not jump in a little bit? We'll see what can happen. I'm not big on any options trades that I'm doing. Just for the record, I'm pretty small on everything there, because trading options practically is definitely a little earlier on my learning curve. I don't have a ton of experience with it. But that's pretty much all I got, which is which is not too much. It's a pretty boring day. The market failed early. It failed to show relative strength. The 10 a.m. candle put the market in the penalty box pretty quickly after the first 30 minutes. I saw very little to do, and subsequently I honestly did very little. So I hope everyone was able to have a good trading session, take advantage of some of that relative strength that was off the open. I'm happy to answer any questions that anybody might have. Bill providing some information on net new treasury issuances. We have that occurring again this month. I'm going to read this after I finish up with the meeting. Thank you, Bill. From Cody, thoughts on swinging Apple short? I have stock from 170.80. The daily looks weak. I'm just concerned about the overall market supporting it, as you should. You should be concerned about being short anything with the market supporting it, but you're short the right thing. You short something that's relatively weak on multiple time frames, potentially setting up for a breakdown. You have an okay price, so I think it was worth it to keep a little bit of that overnight, especially with the broader market kind of failure today, inability to continue. It can enable relative weakness to be relatively weak. So I like it. You have an okay profit cushion. Didn't close great. Just make sure you obviously manage your risk on the trade. Don't get married to it. From Nick, you spoke about Tesla short Thursday morning versus the pre-market highs. What time would you recommend entering the trade for someone who's strictly a day trader? Sure. So, let's take a look at Tesla on Thursday and Tesla versus the pre-market highs. So here's the thing that's worth kind of going over again. When I'm doing the morning meeting, I don't obviously know what the market looks like during the day yet because the market hasn't opened. So when I'm talking about trade ideas and I'm talking about trading levels versus levels, I'm pretty restricted on what you can utilize as a stop loss. Because a lot of the times on trade ideas that I actually have, I really prefer to be able to use a stop loss that's going to be a little bit tighter based on something intraday and not necessarily utilizing a wider stop loss that comes from a pre-market high like you're mentioning here with Tesla or a daily chart level high because it's going to be a lot more risk and it hurts the risk reward. So I'm always starting just with the information that I have. So initially, for some reason, I don't really remember specifically what was going on with Tesla on Thursday, but if I liked Tesla as a short on Thursday and I'm saying, hey, I like it short versus the pre-market high or versus this daily chart level, which is a lot of what I'm doing, I'm kind of mentioning that because I've got no other alternative for a better stop loss yet at that point. So a lot of times those pre-market ideas are exactly just that. They're ideas. Maybe you can start with a feeler, just shorting, and honestly, if you're shorting that big picture, you're asking me about the timing of entering the trade if you wanted to short versus the pre-market high. I don't know, you could have shorted some pre-market, you could have shorted some at the open, you could have shorted some after the open. Obviously price matters, but it almost doesn't matter when you're talking about kind of giving it that wider room. I don't think that there is necessarily a perfect entry. It's more of the entry that you're willing to afford the risk on because the risk reward makes sense for you. But really what I would prefer is if you take the idea, for some reason I like Tesla short, my only stop loss opportunity is I'm doing this morning meeting at 9-10 a.m. is the pre-market high. Take that idea and then look for an actual better execution spot versus something that's on the small time frame. So that's what I would really prefer. Otherwise, a lot of times what I do is I'll just take a feeler. If I like that idea, I might say, I'm just going to short a little bit of Tesla here versus the pre-market high. And then honestly, price really matters on an entry point. It certainly does. And I think it was just last week that I was talking about the importance of having good execution in your trading ideas can be the difference between a break-even trade as opposed to a pure failure. But when you're talking about these bigger level stop losses that are kind of based on pre-market ideas, it's kind of just, hey, at the price it's trading at right now, is it worth it to me from a risk reward perspective to short a little bit here, giving it that much room? And if the answer is yes, then go ahead and short a little bit, and then maybe you can look for an opportunity to get heavier if a better setup comes in. If the answer is no, then don't take any and wait. And if you like the idea, then wait for the opportunity for a potential better setup to come in. So hope that helps, Nick. So you entered on the open and you put your stop at the high of the day, the top of the shooting star candle. Shooting star candle intraday or pre-market? I don't really see the 2 minutes after the open. This is Thursday, right? I'm looking at the right Thursday. So I don't see a shooting star in the beginning of the day here in Tesla. I basically just see it ripping up, giving a very wide-ranging inside five, which actually then led to about 3 inside fives in a row before it broke down a little bit. Oh, I'd have to look at a 1 or 2 minute time frame. Sure. Cool. Cody missed my answer on the Apple question. I want to tell you to just go watch the YouTube video after the meeting is over, but it was a quick enough of an answer that I can give it to you again. Yeah, I like the Apple short. I like that you have a dollar profit cushion. I think it's fine. I wish you had a little bit more. But if the market can start to range out a little bit more, then I think that you have a higher potential of relative weakness paying better. So, I like it. It's relatively weak. It closed weak. It's the inside day and down. I'm not I'm not trusting that this market's going to break down by any means, but I'm also kind of not trusting that this market's really going to be able to continue in the way that it has, and that makes me like relative weakness more. From Dave. I asked a question a few days ago about index trades, and one thing that you alluded to was a trading technique where some traders would look for setups that they know but are failing, and use that to trade the setup in reverse, for lack of a better term. Yeah, sure. Basically, just false breakouts and false breakdowns. I know a trader or two out there who make an entire career off trading false breakouts and false breakdowns, specifically with the indexes. Two questions about that. Was today at 10 to 10:15 p.m. in the NASDAQ where we had an inside and up fail, an example of where you would just get short when the inside and up? No, I don't think that applies necessarily for like inside bars so much as it is like bigger picture support and resistance levels that break and then fail and move in the other direction. I think that with the cues at that time of the day, that 10 to 10:15 time of the day. So yeah, you get that inside 5 and up, which has the potential to maybe negate the negative Maribozu from 10 a.m. That's one of the ways in which they occur. But I don't think the whole thing about like failed support and resistance trades to come in on the other side is that so many people get trapped, right? You want in this case to take advantage of failed moves, everyone to be looking at the same thing, and everyone to be getting stopped out of their shorts because the resistance level broke, suckered into new longs. It moves up a very small amount, and then it fails back down, and then there's less bids that are out there. There's more puking of people who got long. There's less people that are short who might be chasing back in like that. And that's what you want specifically. I don't think it's, just an inside 5 and up here is going to give you that same kind of dynamic of trapped buyers and sellers that are in there. If anything, this is just, inside candle tries to break higher, but it's after a negative Maribozu on news, and we just get a lower high and the thing fails down. If this is not an example, could you point me towards one? Yeah, basically exactly what I'm talking about. Big picture support and resistance levels is what I think that you want to be paying attention to for that type of trade. Daily chart support resistance levels when they fail a little bit and go the other way. From Michael Davis, I semi-frequently see the market come within a few ticks of my take profit order, only to never get hit. I struggle with marketing out when price struggles to hit my order. I've been working on a process to avoid giving back a lot of profit. Any tips or tactics you would recommend to solve this problem? Sure, so great question, Michael. I think first of all, it depends on what, for lack of a better term, what type of take profit order we're kind of talking about. Meaning, so I'm a big advocate of getting risk covered. And one example of that is to sell 50% of your position at 1-to-1 on your risk. So let's just say that, just a simple trade here. You're risking 10 cents on the stock between your entry point and your stop loss, and the stock moves 8 cents in your favor, but you're offered out 10 cents in your favor at 1-to-1 for 50% of your position to cover your risk. Stock moves 8 cents in your favor. There's nothing you can do. If it moves 8 cents in your favor and then it fails and you get stopped out, there's nothing you can do. You can't really, when you're that tight on something, risking 10 cents, trying to cover risk at 10 cents, you can't downtick 4 cents in the money and have that accomplish anything for you. So you just leave your offer 10 cents in the money. If you get filled, great. If you don't get filled, then it just wasn't meant to be, and you get yourself stopped out. It is what it is. Yeah, I'm talking about all limit orders too. A different situation is like, you've already covered your risk. You're very much in the money. You're 3x your risk, 5x your risk in the money on some of your remaining stock, and you have an offer out. And a lot of times those offers are somewhat random. You risked 25 cents on this trade. You're $1 in the money, and your offer is 3 cents away from getting filled. At that point, if you get filled, $1 in the money versus you get filled 97 cents in the money, does that really have a difference on anything? No. So you don't want to be $1 in the money and then give it now all the way back to your stop loss. Give it back $1.25 in the example that I'm kind of referencing here to make an extra 3 cents. That makes absolutely no sense at all, even though I've done that myself. So it's a little bit arbitrary, but at a certain point with those wider limit orders that are multiples in the money like that, where maybe my offer is a little bit arbitrary, I use what I call a risk-reward stop, which basically simply means it has nothing to do with technical analysis or anything else. Ideally, I want to get filled $1 in the money, but truthfully, $1 in the money versus 93 cents in the money is going to not really make any real difference to me, but I certainly can't give it back $1.25 to make that extra 3 cents. So when I see that I'm 97 cents in the money and I'm offered 3 cents higher, I'm offered $1 in the money, I'll leave the offer out there, $1 in the money, but I'll put a sell stop in for that same limit order at 90 or 93 cents in the money. So one of two things is now going to happen. Either my limit order on the offer is going to get taken and then I cancel the stop and I got my order filled and that's great, or the stock's going to pull back that extra 5 cents or whatever. It's going to trigger what I call my risk reward stop. It's specifically what it is. It's a risk reward stop. I'm willing to give it back 5 or 7 cents to make an extra 3 cents, but I'm not willing to give it back $1.25 to make an extra 3 cents. So in this case, my sell stop triggers, my risk reward stop triggers, I make a little bit less on the trade, I cancel my limit order, I get slightly annoyed when it goes to the price of my limit order anyway, but every once in a while, I think this happened to me in Palantir today. Let me check, see if it actually did or not. No, it went to my offer price exactly, so I don't know if I would have gotten filled or not. Palantir at $9.55 today. I had an offer at 99 cents. 99 cents is the high, and I ended up kind of using a risk reward stop that got triggered a few pennies below that or whatever. So I don't know. I either saved myself that order or I robbed myself of a few pennies, and I can't actually tell looking at the chart. But that's typically what I recommend there. I've thought about the risk reward from my take profit, but I'd never thought about putting my stop tight for a risk reward stop, like you said. Yeah. So that's what I utilize it for. Again, only for the real wider limit or offer take profits, though. When you're multiples in the money, not if you're risking 10 cents to make 10 cents, because then it doesn't matter. I mean, it doesn't you can't use it. No problem. From Ryan, do you ever close out swing positions based on candles or chart patterns instead of strictly sticking to the stop in your game plan? My initial answer is no, but let me read the rest of your question. For example, an inside and down, definitely not. Definitely not for an inside and down. I came in long NU today. Nice. Versus 1 penny below the low of the 27th. Okay. 1171. There was an inside down Thursday, so I was watching the close for that break. I closed up the position since my cushion was gone by the end of the day. Assuming today. There was an inside down Thursday, so I was watching close for that break. I closed out the position since my cushion was gone by the end of the day today. Yeah, I don't. I pretty much always stick with my original stop loss. This is one of the most tricky situations though is when a swing position closes barely above your stop loss, because you're not really in that win-win situation anymore, because the thing could easily get past your stop loss. But at the same time, you want to be a stickler for your game plans, and your game plan said that you're not supposed to be out yet. That's one of the more trickier situations I kind of find in all of swing trading, is what to do with those in those scenarios. And I can't fault anybody who just pulls the trigger and doesn't want to take the overnight risk when they don't have that profit cushion. They aren't really in that win-win anymore. For myself, though, for the sake of consistency, I almost always will just stay in it, which every once in a while gets me in trouble, and every once in a while saves me on something. Second example is JetBlue. I've been swinging it since mid-March. I think the airlines have been doing pretty well recently. Let's see what JetBlue's been doing. Not as well. I've been swinging it since mid-March, and I moved my stop up to $6.99, presumably from this low here on the 23rd. But today's candle's nasty. You don't want to see this candle, but today's candle, and when I see is a triple top, yeah, it could be a triple top there. I don't really believe in triple tops, but that's another conversation. And I feel like by the time you get to, I need to clarify that, by the time you get to a third top, you're not at a triple top anymore, you're just at resistance. There's a concept behind a double top, and then subsequent holds beyond that I just think are stock holding resistance. But anyway, so you clearly have resistance that it failed at again and failed back down on today. Resistance around 755 led me to close the position as well today. In both of these cases, they close within 10 cents of my stops, and I really want to manage my risk as well as possible. Yeah, same answer for me. For me personally, I'm going to keep the position, but this is one of the trickier situations in swing trading, is when you're really not in that win-win situation. I can't fault you for saying, you know what, this thing closed really bad. It could easily gap past my stop loss. I need to manage my risk. Being overly prudent on risk management is rarely a bad thing, so I can't fault you for doing it. It's a bad situation to be in. Again, for me, for just the sake of consistency, I don't do that. If I have a game plan that says I'm supposed to get stopped out at a price and it didn't trigger my stop and closed a few pennies above it, I risk it gapping past my stop, which has certainly happened in the past. So, hope that helps, Ryan. Thanks for the question. Thanks, Tate. From Robert. From past years, I remember Easter Mondays were more sideways, boring days. Pretty nice opportunities today. Yeah, I think that sounds right, Robert. From Plasma Lab in YouTube, what are your thoughts on gold? Looks like in March it broke out of a monthly, I can't read that word because YouTube is blocking it, and a cup and handle pattern. It started in October of, say, 2012. I know this thing's been in a range forever, but let's take a look at that. Monthly. I don't have a monthly on this computer here, but I certainly see the cup and handle that you're talking about. And a cup and handle is a trend continuation pattern. Technically, the move is double the cup. So let's call that 186 down to $100. So technically, you'd be looking at like whatever. Let's just call it $85 of upside on the break of 185. So could be a pretty significant move there. So yeah, I see it on the weekly chart. Definitely see what you're talking about. The big picture, gold looks incredible, to be honest. It's the best it's looked in a long, long time. The small picture, I'd be a little careful chasing extension, but gold looks great. Gold looks great. I don't see why it can't give that move up to 270 or whatever I just said the measured move would be. Thanks for the question. Looks good. All right, gang. Looks like I got through all the questions here. Monday, after a long weekend. I hope everybody's got their head on straight. So we'll pick it up in the morning. Have a great night. If you're in YouTube, you know what to do. Like, subscribe, and tell